Hi guys. Today I'm going to be talking about order block theory. Order blocks are something that I use every day for my trading. And yeah, this is the backbone of my changing in the state of deliveries, PD array selection, and how I know which order blocks to trust and which ones to just fade. So yeah, I'll be going over that today, and hopefully it's not a long video. Just want to get in, get out, be quick. So yeah, let's get started. Okay, first off, what is an order block? An order block is, to put it simply, it is the consecutive candles down or up in the different scenarios, bullish or bearish, before or into a point of liquidity, and yeah, that's about it. That's what I like to think it is. And what this is, I like to keep it simple. So it's the consecutive candles down or up into a point of liquidity. So that's putting it simply. And I look for certain things in this definition, which helps me determine the probability of the order block. So there are 3 things or 4 things that I like, that I look for in my order block selection, and let's get started with that. So the first one is displacement. Okay, displacement, and displacement is important for me because it shows the volatility of the change in the state of delivery. Number 2 is liquidity slash PD array. Liquidity slash PD array, right? So that is where price trades into for the order block. And lastly, for me, the most important one, or like top 2, is SMT. Okay, Kraken correlation. So if we can get into this more in depth, right, I'll first show what an order block looks like, just drawing here quickly, and then we will get into some examples in the chart quickly. So an order block will look something like this. So there's a down close candle, down close candle, down close candle, right? Then these are all bearish candles, okay? Then after this move, it will tap into some sort of liquidity here with SMT, okay? We'll look for something like this, okay? SMT with a high or a low, etc. And then what we'll see is something like this. Bang, bang, right? So there'll be a quick move up, causing the consecutive candles down or up that's into a point of liquidity to be inversed, right? So if we look at this, right, it kind of looks like a V. And there will be 10 to 1, there will be a gap over here with the correct order blocks, or the correct selection of order blocks. We'll see something like this, right? Or the gap might form up here in line with the change in state of delivery, or it could form up here, right, higher. It all depends, as long as we see a gap. Now typically we could also see something like this, right? Down, 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 and then we see something just like this. One singular candle, and then here's our changes in state of delivery, right? With all these other factors present with cracking correlation, SMT, or liquidity, right? So it's these two factors here at the bottom. I'm just not going to draw them here. So we'll see something like that, right? Or we could see something like this, right? See that, and then we see something like this. Right, so I'm just going to change some of these colors to make it easier to read. So the pink is bullish candles, okay? So we see something like that, where it doesn't like really displace, because we're obviously looking for one clean movement, okay? Like these two ones here. So this one and this one, right? So as you can see, this one takes a lot longer, which I don't really look for, because it shows it to me that there's not really much conviction in the move, and it's not displacing heavily, so the volatility isn't quite there from the initial move from the PD array. So if we can go into the chart now, after I've just cleaned everything here. So another thing to look for in order blocks is the thickness of the bodies, right? Because we don't want to be trading an order block that has a very big wick and a big wick and a small body, right? We want some thick meaty candles to classify as our order block, okay? So if we can go into the chart here, let's look for some examples that are following our three rules, okay? So if we can look, let's just look quickly. I'm just gonna do this in, what's it called, in like the past. So I'm not gonna like do anything live right now because I don't want it to be too long, but yeah, so let's see. So if we're looking here, there's a order block here, right? Now we're gonna see if this order block will match our description. So here's our order block. Let me just make it larger. So let's see. So our first thing is there displacement, right? Yes, there is, because we can see a fair value. Sorry, we can see a fair value gap here, right? Fair value gap. So there's displacement. Is there a liquidity? Like liquidity gets taken from this order block from this move down? Yes, there is, because there's a low year failure swing, right? We know it's a swing because there are two candles next to it, right, that do not take this low. So we see, okay, there is liquidity being taken, sell stops being taken, being ran. Now the last thing we need is cracking correlation, right? SMT. What this does is this confirms our order blocks low over here to be a swing, right? It allows it to be a swing, meaning that if the SMT is valid, this should hold, right? This low here should hold. So let's see if there's any SMT. I'm pretty sure there will. Either SMT over, let me just bring this up because it's irritating me now. So there will be SMT here, right? SMT with the sell stops that the order block sweeps, right? Or there will be SMT somewhere here. somewhere here. So we'll go see now. Somewhere here there will be SMT, okay? So if we look at, let me just bring it up here, 2 screens. Sorry. Okay, so there's no SMT by the sell the sell stops, which is fine, but there is SMT over here, right? So as we can see here at the bottom, 18 June 740 is all the way up here, right? 18 June 740, right? So 18 June on NASDAQ doesn't take the low, right, on NASDAQ, but on YM, I believe I've got you. Yeah, on YM, the low gets taken quite a while back, right? So there's SMT here. So that validates our three criteria for valid order block, right? And once we see that price closes above the body, right? I use the bodies. So there are my blue lines marked on the close, right? As we can see, the bodies of these candles are a lot larger than the wicks, right? These black bodies here are a lot larger than their wicks. So that's a good sign, thick meaty candle. So once we close above there, this would be my entry, right? My entry signal. I will probably either put it at the low, my stop loss at the low, or equilibrium of the candle, right? So as we can see, after that happens, I don't know where you would target. It's all up to you. My 2 are straight take profit after 5 minutes or so. No, I lie. 15 minutes, 20 minutes. Okay, that's 2R. So if we can look for a couple more examples I've got here on my Figma. So it's also order blocks. I use it also as a V-shape, V-shape changing the state of delivery, right? So if we can look at this example here. Okay. If we can see here, we can see where this blue line is, right? We can see a thick down close, right? Down close, big bodies, sweeping a liquidity over here, right? Where my cursor is. Then I believe we have SMT somewhere here. See where this candle is here, right? There's a SMT here. I believe it's a SMT full, which I'll get into. So there's a SMT there, right, where YM doesn't take it, but M and Q does. So we get these thick closes down, but then we get a V straight back up, right? And my entry will be up here. Just market order, looking for 2R, with my stop loss being at the bottom of these candles here, because the reason I don't want to put it at the low here is because then it makes my stop loss way too large for my liking. So I would just put it at the bodies or equilibrium of these candles, right? Because if price does come down to the opens of this candle here, chances are it's going to take the low, right? So if we can move on to the next example here. So we can see here, right, where our blue line or our order block, right, these thick up closed white candles, right, it gets V-shaped, like with displacement here with this large black candle, right? So if we check for our criteria, we can see that stop hunt over here, or liquidity gets taken, right? Liquidity gets taken at this this high, sorry. And our last thing to look for is SMT, right? So our SMT would be, I'm actually not too sure there is SMT here, but this is just an example of what the V shape will look like, right? So if we can look for SMT here, we might find some where I'm pretty sure, right, there is SMT with this fair value gap up here, right? This fair value gap here gets taken by YM, right? Taken by YM, but that same fair value gap will be up here for NQ, where it does not get taken, you see. Then we get our change in the state of delivery with across all three of these assets, which after this we displace lower, right? So this was one of my examples from when I was backtesting, and I took this trade and it was a successful 1 to 2. I took my stop loss again and I put it at the body, of this the last up close candle before the down move, the down V-shaped move. So I put my stop loss there, and then I aimed for 1 to 2R, right? And it played out. So we can look for another one. We have here. So as we can see, right, we get a large move up, right? A large move up, and then we V-shape lower, right? But this is where most newer traders have to get cautious, because as we can see, this move happened at 9:30, which is the indices open or futures open. So what we can see is a large manipulation up, right? Taking these stops or this high here, right? And we form SMT where this 9:30 candle up takes some other liquidity, whilst Nasdaq and Nasdaq doesn't, right? But the one thing it does do, which I'll get into later on, it's called a strength switch, where even though YM takes the high, that means it should be the lagging asset, right, for the move down. But however, it actually changes the state of delivery first, inversing the order block, making it the leading asset, which is a strength switch. Okay, I'll get into that later. It's another form of cracking correlation, but as we can see, there's a high getting taken, another high on top getting taken, forming SMT, cracking correlation. Then we get displacement lower, right? If we go into the 1 minute time frame, we will see our fair value gap there. But this process or the sequence is super high probability for me, so I don't really need to look for that fair value gap. I just need to look for the close under or above the order block to enter market execute, right? So I believe this is our last example. So we have another example here where this forms around 9:30, I believe, again, where I believe this is a 9:30 candle where we close low, right? Sorry, we close low, we get this thick down close candle, right? Sweeping liquidity here, we're sweeping the low here, right? And then we V-shape all the way back up, closing above the open of the order block, creating our displacement with FEGs, and the last thing we look for is SMT, right? And I didn't have it marked out, but there was SMT with this order block low here to the left, where YM took that low. However, NQ did not, causing NQ to change the state of delivery first, right? Meaning NQ is the leading asset. With all three criteria met, which allowed me to enter at the open or at the close, the first candle close above the order block, right? Another trade I took, it did it did accumulate for a bit, then it manipulated lower back into this this order block, and then it distributed back up again. So going from the last video, the accumulation, manipulation, distribution, that occurred here just on the 3-minute time frame, where price tapped back into this order block and then distributed. Okay, so let's go back to the charts and let's see if we can find 1 or 2 more examples, right? So let's see here. Seems like a good one over here. Okay, I'm not too sure if it meets all the criteria. It's just the first one I saw. So if we can go find this on YM as well, we can look, see if there's our stuff that matches up. Okay, well, that's what I hate about this stuff, always goes random. But okay, so let's look for this now. Okay, we're at a different time, but that's fine. Okay, okay, so let's look at Dow Jones quickly. So as we can see here, this is another example of the leading asset, actually, not a lagging asset. I've been showing you lagging assets, right? So with the lagging asset, right, the lagging asset will typically do something like this. So let's see. Here's the accumulation, manipulation, distribution, right? So there will be stuff like this, right? Our accumulation, manipulation, distribution, right? So now what we're going to do is we're going to combine order blocks and the change in state of delivery with our accumulation, manipulation, distribution. Okay, so if we can do that quickly, we will see that a leading asset, right, will typically take this high. Okay, if our leading asset is bullish, we will take this high, right? But if we have our lagging asset, it will typically do something like this. Right? So let's just make that better. So we'll see something like this, right? Where this same high here will get taken by the leading asset, but the lagging asset won't take it. So it will leave a failure swing, right? Now typically, the lagging asset will distribute a lot further than the leading asset will, because the lagging asset didn't have to waste time taking out liquidity, right? So the lagging asset will often distribute first, okay? But with that, we can see something that lines up with our order block theory, okay? So we'll see something like this. Hopefully it's thin enough, but we'll see something like this, right? And then we'll see this. That same exact sequence, just on the accumulation, manipulation, distribution. Okay, so that's what we see. Let me just make it easy for you guys to look at. So obviously purple candles are bearish candles. The pink ones, the pink red ones are bullish candles. Okay, so we'll see that. Now this sequence here shows us our order block, our change in the state of delivery, the closes, and our accumulation, manipulation, distribution. So right, so if we can come back to the chart here, we can look for it. Okay, so if we look at Dow Jones YM, we can see up here, right, we're going to look for our sequence. Up here we're going to look for our sequence. Okay, so if we can identify our accumulation, right here, okay, accumulation, look for the same time here, accumulation, right? So once we see this, right, there's our accumulation. Now we need to look for our manipulation, correct? So if we can look for that, right, we can see here YM distributes up, right? Where where Nasdaq doesn't. Nasdaq actually distributes lower, right? But if we can look at ES, again, this is not hindsight. I'm just teaching you as I'm going with chart examples. I haven't looked at them beforehand or anything, so we'll see if they play out together, right? So now we need to look for our manipulation, right? But YM doesn't take out the high, sorry, neither does NQ. So what that means is we need to look for another asset that takes out this high, right? So we're going to look at ES. Let's see if ES takes out the same high, okay? So ES does not, right? So now our last chance is Russell, right? Where Russell does not, right? So there is no SMT here, right? Or valid SMT in my opinion, that takes out these assets, the high of these assets, right? Now, see, we do have SMT here, right? Yeah, because if you look, that dot on S&P is the same dot on Dow Jones, right? And Nasdaq, right? So an asset does take out the high, right? However, I wouldn't look to trade this because there's such a little distance or difference in the SMT, right? Where I would not classify it as valid, in my opinion, due to the fact that it is just so nearby, right? But we will still see if our order block will pan out, right? And if we can find it, okay? So we know the order block, right, as our last up close candles, or our last candles before the down move, right? So if we look here, right, we can see our thick up close candles, right? We can see the white ones there. So now what we need to do is look for a V shape with displacement lower to close under these order blocks, okay? And do we get that? Yes, we do. Now, it is not the cleanest looking change or in the set of delivery or order block, but however, it is something that I showed you before. So let's look here. So I told you guys about this, right? Where it goes like this, but then it goes something like this. Sorry. Looks something like that. And then we only get our close, right? So as we can see, we have something very similar here, where it goes up, great displacement, then it goes lower, it stalls out a bit, then eventually we get our displacement over here, right, where we close there, and then we get our displacement over here, right? So there. So, and then after that, we can see price distributes lower, not even tapping back into the order block. Typically it does, depending on how volatile the move is and how strong the move is. It will come up and either tap the fair value gap, which it does here, or it will come up and tap the open of the order block, okay? So to summarize everything, okay, to summarize everything, we'll go through it again quickly, and let's see, right? The three things we need are SMT, right? Liquidity, and displacement, okay? Now, if you were not to get all three of these, right? Personally, I wouldn't look to take that order block because either it is not protected by a valid swing with SMT, or we have not hit our liquidity target yet, right? In that case, we could still go lower or higher, depending on where the liquidity is and if you're bullish or bearish. So if I were to see something like this, right? Let's get it here. If I were to see something like this, right? And then we get this. Obviously, this looks like a valid order block, right? So, but the problem we have is there's a higher time frame PD array right over here. Okay? There's a high time frame PD array over here, right? So we have not tapped that yet, also known as our point of interest, right? So we have not tapped that yet. And there is no SMT anywhere to be seen, right? Nothing. So there's nothing. What we'll see happen is this, right? Price will come and tap it, and then this will happen. That's how people get stopped out, right? And price automatically goes to their TP because they had the right draw of liquidity, but they entered at the wrong time. Now, if we look at this, right, this formation also looks very similar to our accumulation, manipulation, and distribution. Okay, so now our new change in the state of delivery will be right here, right? And that is our valid one because price taps into our PD array. Okay, let me make it thicker. Taps into our PD array. Then we get our displacement. Our displacement will be here, or up here, or down here, wherever, right? We'll get it. Now, chances are we'll form SMT here, right? We'll form SMT there, or we'll get SMT somewhere here, right? With one of our assets trading a lot higher into the next high, or we'll get SMT here, right? Where with this PD array, with our high time frame PD array, we will we'll see that one asset trades into it, but the other will do something like this. Right, let me get it here. We'll see something like this. Right, where one asset will trade into the high, where another one won't. Okay, we'll see here another one doesn't trade into this high or this liquidity, where the other does. Okay, and once this asset that does trade into the high, right, displaces, right, and this one, then that means this asset on the left here does not need to trade into that high, right? But this asset on the left here that doesn't trade into the high will be the one you want to trade because it will change in the state of delivery first, right? Which means this one, this asset that changes the state of delivery first, will distribute a lot further than the asset on the right. Okay. Also, typically, if there's a retracement, right, this asset that took the high will retrace a lot higher, right, than this asset. So we'll see something like this, right? So if I can move this, we'll see the asset that doesn't take the high retrace a lot lower and distribute first than the asset that does take the high, because the asset on the left is a leading asset, right? So hopefully that makes sense. I'll get into more depth sooner rather than later, But first, I'm just trying to teach some simple concepts where you can apply that to the charts instantly to higher your probability for order blocks, and just learn how to rather choose the correct order blocks than just guessing. So I hope this video is insightful and helps you guys. And yeah, this once you backtest this and look at it in the charts, you'll look at order blocks completely differently, and the chances are your order blocks will have a lot higher probability of holding, and you'll just see a positive outcome in your trading results. So thank you. Till next time.